Welcome to the deep dive. We basically take a big pile of information and pull out the key stuff just for you.
Get you up to speed fast.
Exactly. Today we're focusing on IQVIA Holdings Inc. Stock symbols IQV.
Right.
Our mission here is to really understand where IQVIA is right now and, what its future might look like. We're using a fresh research report from Compasscope and IQVIA's own Q1 2025 earnings call transcript.
So pretty current sources.
Yeah, we've waded through them so you get the highlights. We'll cover, everything from what they actually do to the factors that could shape their path forward.
Okay, let's start with the basics then. What is IQVIA?
Good question. Fundamentally, they're a global leader serving the life sciences industry. Think drug companies, biotech, that sort of thing.
And they came about from that big merger back in 2016, right? Quintiles and IMS Health.
That's the one. It was a pretty big deal because it combined Quintiles, which was huge in contract research, actually running the clinical trials.
The CRO side.
Right, the CRO side with IMS Health, which was all about healthcare data and analytics. So this merger created a company with expertise in both doing the research and understanding the data around it.
A powerful combination. And they break this down into business segments.
They do. Three main ones. First up is Research and Development Solutions, or R&DS.
Okay.
This is really core to drug development. They're heavily involved in running late-stage clinical trials, phase 2, phase 3, phase 4.
Where you're really testing if a drug works and is safe in larger groups.
Exactly. They offer the whole package, full-service research, but they also do this thing called FSP, Functional Service Provider Offerings.
Which is like lending out specialized teams to pharma companies?
Kinda, yeah. Plus, they help find patients for trials, which is always a challenge, and they do a lot with real-world trials, gathering data outside the traditional clinical setting.
Got it. So R&DS is the hands-on trial execution part. What's next?
Next is Technology and Analytics Solutions, or TAS, and this is where that IMS Health heritage really shines.
The data side.
The data side, massively so. They have proprietary data from, get this, over 150,000 suppliers.
Wow.
Yeah. It fuels their real-world evidence work, their analytics. They even have AI tools, like an IQVIA AI assistant. They provide cloud platforms to help manage trials, commercial analytics for sales and marketing insights.
And they mentioned that huge number of patient records.
Oh, yeah. Over 1 billion de-identified patient records. It's an incredible asset.
1 billion. It's hard to wrap your head around the scale.
Yeah.
Okay, so R&DS, TAS, what's the third piece?
The third segment is Contract Sales and Medical Solutions, or CSMS. This is basically outsourced commercial support.
So like providing sales teams for drug companies.
Exactly that. Sales teams, marketing services, medical communications, deploying people out in the field to talk to doctors and patients. It rounds out their offering.
Okay, so a really broad set of services covering research, data, and commercialization.
Pretty much end-to-end for life sciences. Which leads us to the next big question. How do they actually compete in this space? It sounds crowded.
It is competitive.
Yeah.
But according to that Compasscope report, IQVIA has some pretty significant advantages. The biggest one, probably, is those proprietary data assets we just talked about.
That billion-plus records thing.
It's not just the number. It's the integration. They combine data from running trials with real-world patient data. It gives them a view that's, well, very hard for anyone else to replicate.
Like a unique window into what's actually happening.
Precisely. It helps them find the right patients, predict outcomes, optimize how trials are run. It's a serious barrier to entry for competitors.
Makes sense. And their position in the CRO market itself.
Also very strong. They've got about 15% market share globally. Huge scale, especially in those later stage trials.
Which gets them those big contracts.
Yeah, they have preferred provider deals with 22 of the top 25 pharma companies. That says a lot.
And those clients tend to stick around, I gather.
They really do. The report mentioned a client retention rate over 99% among those top players. These are long-term partnerships.
Incredible. What else gives them an edge? Technology.
Definitely. They're pushing hard on AI. Decentralized trials. Using tech to run trials closer to patients' homes. That collaboration they have with NVIDIA on AI is a big signal there.
Right, leveraging tech to make trials more efficient.
And don't forget the original merger itself. That combination of Quintiles and IMS created what they call economies of scope. They can offer that whole spectrum of services we discussed.
Okay, so a lot of strengths, but no company's perfect. What are the challenges or weaknesses the report pointed out?
Well, one major flag is their debt level. They ended 2023 with about $12.3 billion in net debt.
Oof, that's a big number.
It is. And that kind of leverage can limit flexibility, for things like big acquisitions down the road. It adds financial risk.
What else? Competitive pressures.
Yeah, the CRO market is tough. There's always pressure on pricing, which can impact margins. And while IQVIA leads in data right now,
Others are trying to catch up.
exactly, competitors like ICON, LabCorp's, Covance, they're building up their own data capabilities. So that lead isn't necessarily guaranteed forever.
And regulations, data privacy, things like that.
That's a factor, too. Their whole real-world evidence business relies on regulators continuing to accept that kind of data. And any major changes in data privacy rules could definitely impact how they operate.
Okay, so let's put some names to the competition. How does IQVIA compare directly to, say, ICON?
ICON's a major player, especially after they merged with PRA. They're known for being operationally efficient.
But the data side?
That's the key difference. They just don't have IQVIA scale or the deep integration of proprietary data and analytics. Especially for things like real-world evidence or decentralized trials, IQVIA has an edge there.
What about Charles River Labs, CRL?
CRL is different again. They're mostly focused on preclinical work, the very early stuff, before human trials.
So not really competing head-to-head on the big clinical trials or the data analytics?
Not in the same way, no. They don't have that combined sero data ecosystem like IQVIA. Different niches, really.
And LabCorp with their Covance arm?
LabCorp's interesting because they integrate diagnostics with the CRO side through Covance. That can be appealing for certain clients.
But on analytics and AI?
Generally seen as trailing IQVIA in terms of the scale and sophistication of their data analytics and AI tools.
Okay, one more. Syneos Health.
Syneos often focuses more on mid-sized companies, biotechs. They have strong commercialization services too. But again, they lack the global scale, the infrastructure, and especially those unique data assets that give IQVIA its leverage.
So summing up the competitive picture, IQVIA has this defensible moat, mostly built on data, tech, and trial scale.
Yeah,
But they're definitely facing financial pressures from the debt and ongoing competition across the board.
that seems like a fair assessment. Which brings us to their growth strategy. How are they planning to keep expanding?
It looks like a multi-pronged approach. In that TAS segment, technology and analytics, they're aiming for mid-single-digit growth, driven by more use of their real-world evidence, growing their software as a service revenue from those cloud platforms, and really pushing their AI tools, like that AI assistant and AI for patient relationship management.
Okay, makes sense for TAS.
Yeah.
What about the big R&DS segment?
There, it's about leveraging their leadership in late-stage trials, getting more of those preferred provider deals with big pharma, and they have a huge backlog, $31.1 billion at the end of last year.
That's a solid pipeline.
It is. They're also trying to shift more towards fixed-price contracts and use automation to boost profitability in R&DS.
And real-world evidence seems like a recurring theme.
Absolutely. They're investing heavily there, using that massive database for regulatory submissions, getting deeper insights. It's clearly a strategic priority.
Tied into the AI push as well, I imagine.
For sure. That NVIDIA collaboration is key. They mentioned on the earnings call having over 20 AI agents already deployed.
Oh, really? In production?
Yeah, across commercial, RWE, R&DS. They gave an example where one agent cut commercial delivery time by 2/3 and reduced costs by 30%.
That's significant.
And they're scaling fast. The plan was, I think, 12 use cases by the end of Q2 and aiming for 40 by year-end. Seems ambitious, but shows the direction. Correction. Source seems to indicate scaling to 4 use cases by EOY, not 40. Let's stick to what was likely meant. So scaling to maybe 4 key use cases by end of year is probably more realistic, but still a clear focus.
Okay, significant AI focus.
Yep.
Any other growth levers? M&A?
Yep, they plan to keep making targeted acquisitions, and they'll continue monetizing their commercial outsourcing expertise in the CSMS segment.
And the bottom line, focus. Margin expansion.
Right. Through automation, those fixed-price R&DS contracts, and hoping the higher-margin TAS business becomes a bigger piece of the pie.
How does this compare to what competitors are doing? Are they all chasing the same things?
Not entirely. Like we said, CRL is tied more to early-stage funding. LabCorp's focused on integrating diagnostics. ICON is digesting PRA and building its core CRO. Syneos is after the mid-market.
So IQVIA's strategy seems more diversified, more focused on that data AI integration.
Yeah, that combination seems unique compared to the others. It potentially gives them a stronger long-term growth outlook if they execute well.
Ah, execution.
Yeah.
Always the key. What are the risks there? What could trip them up?
Well, the Compascope report did highlight execution risks. One is just the sheer complexity of their business, integrating all these different services, rolling out new tech like AI. It's not easy.
Juggling a lot of balls.
Definitely. And that high debt level we mentioned is a constant financial risk hanging over them.
And relying on those big pharma clients.
That's another one. They need to keep renewing those major partnerships and delivering. They did say on the earnings call they renewed all 22 strategic partnerships last year and are looking to add more, which is positive. But there's also regulatory uncertainty around RWE and data privacy. Changes there could force them to adapt quickly.
And the wider economy, biopharma spending cycles.
Always a factor. Macro conditions matter. They actually mentioned on the Q1 call that customers were taking longer to make decisions, about 10% longer from RFP to award, because of caution about the economy and the industry.
So seeing some slowdown in decision-making.
Yeah, and they also noted the funding environment for smaller, early-stage biotech companies had deteriorated, which impacts part of their customer base.
How do these risks compare to peers? Everyone faces execution challenges, right?
They do, but they're slightly different. CRL, as we said, is very sensitive to that early-stage funding. LabCorp has the integration challenge. ICON has to make the PRA merger work smoothly. Syneos is exposed to biotech volatility.
So IQVIA's main execution risk is managing its own complexity.
Largely, yes. But the report suggests this is offset somewhat by their recurring revenue, those strong pharma relationships, and their ability to generate cash.
Okay, let's shift to the very latest updates then. What did we learn from that Q1 2025 earnings call? How did they actually perform?
Pretty well, actually. Revenue came in above the high end of their guidance. Reported growth was 2.5%.
Which adjust higher for currency and COVID work.
Right. Constant currency growth was 3.5%, and if you exclude COVID work and include acquisitions, it was 4.5%. So decent underlying growth.
And how did the segments do? TAS?
TAS was strong. 6.4% reported growth, 7.6% constant currency. And that was led by double-digit growth, again, in real-world evidence.
RWE continues to be a bright spot. What about R&DS, given the slower decision-making they mentioned?
R&DS growth was flatter, as expected. Only 0.3% reported, 1.1% constant currency, or 3% if you exclude COVID impacts. They acknowledge the market's a bit bumpy right now.
But the backlog grew.
It did. Hit a new record of $31.5 billion, up 4.8% from last year, and they said RFP flow, new proposals coming in, was up mid-single digits year over year. So pipeline activity seems okay.
Interesting contrast. Slower decisions, but pipeline still growing.
Yeah. They also mentioned their qualified pipeline was up slightly, driven by large pharma, though they did note an unusually high number of awards from smaller EBP clients were contracted but not yet booked because of funding uncertainty.
That links back to the biotech funding issue. Yeah. Do they talk about things like tariffs or government actions?
Briefly. They don't expect much direct impact from tariffs or current agency actions at NIH or FDA. Interestingly, they see the FDA commissioner wanting to use more AI and RWE as a positive for them.
Makes sense. And drug pricing, like the IRA.
Still early days, they think. But potentially some positives, like maybe increased need for RW because of certain proposals. But the main theme was that client decision-making has slowed down.
Despite the slowdown, did they highlight any specific wins in Q1?
Oh yeah, quite a few. In TAS, things like supporting a launch for a rare ovarian cancer drug, using that AI patient manager for another rare condition, an omni-channel campaign win. In R&DS, they won early-stage studies from a top 5 pharma, a big obesity program from a top 20 pharma, some phase 2 work leveraging their tech, shows they're still closing deals.
And the AI deployment. Any more color on that?
Just reiterated the 20-plus agents in production, the productivity gains, like that 23 time reduction example. Seems like it's starting to deliver tangible benefits.
Did they update their guidance for the full year?
They nudged revenue guidance up slightly, mostly due to FX, but kept their EBITDA and EPS forecasts the same. And they gave specific ranges for Q2 guidance.
Okay. And anything else jump out from the call? That FSP versus full service outsourcing point.
Right. That was interesting. They noted that while FSP outsourcing specific functions had been trending up, they saw less FSP in Q1 bookings and pipeline.
Suggesting a shift back towards full service.
Potentially. They think clients might be realizing the benefits, costs, and expertise of handing over the whole project rather than just pieces. Something to watch.
And those 2 really big trials they'd mentioned before. Any update?
Yes. One is still expected to start later this year, as planned. The other one got pushed out of 2025 due to client-specific logistics.
But both outcomes were factored into their guidance.
Correct. So no surprise impact on the financials from that postponement.
All right, we've covered a lot of ground. Business, competition, strategy, risks, recent performance. To wrap it all up, What are the absolute key things to watch if you're following IQVIA? Compasscope ranked these right.
They did. Let's run through the ones they flagged as high importance. Number 1, biopharma R&D spending trends. Obvious, but crucial for their R&DS business.
Directly impacts demand.
2, large pharma client reprioritization and cancellations. We saw a spike last year. Need to watch if that stays stable.
Especially with those big concentrated relationships.
3, competitive pressure in the CRO market.
Right.
Can they maintain margins? 4, real-world evidence adoption and regulatory trends, key to their TAS growth and differentiation.
Totally critical.
And 5, AI and technological transformation. Can they stay ahead and leverage it effectively?
Okay, those are the big 5. What about the moderate importance factors?
There were 6 of those. Biotech funding volatility, we saw that impact in Q1. Macroeconomic headwinds, again, influencing decision times. Their debt management and leverage risk, always a background factor. Then, drug approval rates and commercialization trends affects the demand for TAS and CSMS, geopolitical risks, given their global footprint. And finally, client discretionary spending on TAS and CSMS services, things that might get cut if budgets tighten.
So a mix of market factors, company-specific factors, and financial health.
Exactly. And like we discussed, the Q1 call gave us fresh data points on several of these, like the client decision-making pace and the EBP funding situation.
So putting it all together from this deep dive, IQVIA is clearly a leader, complex business, strong in data and clinical research.
But definitely navigating a dynamic market with real opportunities and significant challenges.
Hopefully this gave you a shortcut to understanding the core story from that Compasscope report and the earnings call.
Yeah, distilled it down for you. And maybe one final thought to leave you with.
Go on.
With data, AI, and clinical research all converging so rapidly, how might IQVIA's specific integrated model combining all those pieces uniquely position them to actually shape how drugs are developed and commercialized in the future?
Are they just benefiting from the trend, or could they actively drive it because of their structure?
Something to think about. The long-term implications of having all that under one roof in this evolving landscape. This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.